Gold bullion slips despite US-China tensions as Fed's Powell speaks on inflation, interest rates. Gold bullion fell to three-session lows in London trade Tuesday, edging below $1,840 per ounce as global stock markets flatlined and commodity prices fell ahead of today's testimony to lawmakers in Washington on U.S. monetary policy from Federal Reserve Chair Jerome Powell. With Western-backed Ukraine meantime doubling down on defending the strategically unimportant and now devastated town of Bakhmut from Russia's increasingly fractious invaders, US-China tensions worsened as China's President Xi Jinping made a rare direct attack on Washington's foreign policy in a speech to this year's two-sessions Congress of the Communist Dictatorship. The dollar steadied below late February's three-month highs on its trade-weighted index while major government bond prices ticked higher, nudging longer-term borrowing costs further below last week's multi-year highs. But the gap between 2-year and 10-year U.S. Treasury yields widened to a new four-decade record of 0.93 points, widely seen as signaling a recession on this inverted yield curve because it says that interest rates will have to fall in the future. Betting on a Fed hike of 0.5 points at this month's meeting meantime eased back from yesterday's peak, putting the odds at 27.7% from Monday's reading of 31.4% and leaving the most likely outcome as a quarter-point rise. But that rise in the Fed funds ceiling rate to 5.00% per annum won't be the last according to the vast bulk of betting on future decisions. More than 9 in 10 bets on December's Fed meeting now predict an end-year level of 5.25% or higher, and 1 in 3 of all bets forecasts a full 1 percentage point rise or more from today's level to 5.75%. That would be the highest nominal Fed interest rate since New Year 2001, midway through the dot-com crash in US and global technology stocks. If we want to bring inflation back to 2% in the foreseeable future, we have to take restrictive action, says Austria's central bank chief Robert Holman in a new interview today, calling for his fellow voting members at the 19-nation European Central Bank to hike Eurozone rates by 0.5 points 4 times in 2023. With UK inflation continuing to run at double digits, returning it immediately to the Bank of England's 2.0% target would require bank rate jumping to 30% per annum according to analysis in a speech late last month from BOE policymaker Selvino Tenreiro. The UK gold price in pounds per ounce today edged back £10 for the week so far at £1,531, while bullion for euro investors erased most of last week's rally to touch €1,720. Premiums for gold bullion landed in Shanghai versus London quotes meantime slipped to the lowest in almost 2 weeks, but remained 4 times above the typical incentive for new imports into the precious metals' #1 consumer market at $32 per ounce. Western countries led by the United States have contained, encircled and suppressed us, said China's President-elect to business leaders in Beijing overnight, bringing unprecedented challenges to our development, which they must help fight. Eleven's comments were echoed with specific reference to Taiwan by his Foreign Minister Qin Gang, who said the USA risks conflict and confrontation with Beijing. After averaging a record high $1,800 per ounce last year despite bond yields jumping the fastest since at least WW2, the new trendline suggests gold is likely to be more reactive to changes in bond yields than it was in 2022, says a note from analysts at U.S. investment bank Morgan Stanley, adding that central bank bullion purchases, reported by the Mining Industry's World Gold Council to have continued at a strong pace this new year, may slow down, but jewelry and technology demand could see a boost from China's reopening. After setting a lower-than-expected GDP growth target of 5% for 2023, China today reported worse-than-forecast exports for the start of the year, down 6.8% on Jan-February 2022 as imports sank 10.2%.